Try to take a look at then and now in the housing market, and let's look at one particular aspect, which is mortgage originations, which obviously went down dramatically with the crisis, but have not really come all the way back, as you can see in this chart. Are they going to come back, or is this a healthier environment in which we don't loan as much money to as many people to buy houses?
There's two different housing markets right now. There's the market for homeowners and the affluent, and then there's the rest of us. And so those numbers really show the disparity in housing. What we've seen is that there has been some more originations in government loans. Governments have loosened up a bit after the pendulum swung really tight and really tight underwriting standards. But we haven't seen a return of private banks, the private label market, the non-prime market, the subprime market that fueled the housing bust. Now, is it good or bad? We haven't really come to a decision as a society of what is the perfect home ownership rate. Right now, it's tight for some and good for others, and that's where we are.
Nela, you point to something that's puzzled me quite a bit. When Hank Paulson made that announcement, he specifically said it was a timeout. This is a temporary thing. We're going to put Fannie and Freddie into conservatorship. Now we're 10 years later. They're still in conservatorship. Is that a good thing?
Right now, it's a necessary thing because we need a Congress that is decisive and active when it comes to the secondary mortgage market. They are the bulk of mortgage lending right now. We want that oversight until a better plan can be put in place. The problem is no better plan has materialized. And so we're in this stalemate right now with the GSEs. But the good news is the mortgage market continues, even though their future has not been decided yet.
Well, Sheryl, that also brings me to the fact that a lot of those who own homes aren't selling to buy newer homes. Therefore, the beginner buyers, the first home buyers, can't really get in on the ground floor. How does that affect your business?
Well, our business at Taylor Morrison is actually doing quite well. We've seen a very strong market. And honestly, we find that homeowners, or excuse me, customers that really have the ability to repay their loans, they absolutely can get financing today. I mean, what I heard, I absolutely agree with, that, you know, maybe the pendulum did swing too far a number of years ago. But today, customers can get mortgages with, you know, debt to income levels of 50% of their gross income. That's, I think, very, very good lending standards.
They can, Sheryl, they can get the loans. Are they actually asking for the loans? I mean, to some extent, has there been a permanent scarring, if you will, of people who went through that experience and therefore are more reluctant to borrow as much as they could to buy the house that they could own?
Yeah, certainly. You know, they are getting loans today. We're seeing, I think, across the new home industry and the resale markets that sales have been very, very strong. If anything, it's a lack of inventory that's creating some of the challenges, not necessarily only lending. When I look at some of the demographic tailwinds that we have, I'm very bullish about where we're going from here. And, you know, that's across all consumer cohorts. When you look at things like the millennials, they are buying in a big way. I look at Taylor Morrison, and we're finding that a third of our buyers are millennials, and half of them are actually buying their second home, not their first home. Wow. And then if you go to the other side of the barbells, let's say the boomers, we're finding that, you know, it's about a third of our business at Taylor Morrison. But honestly, when you look at the numbers, there are more boomers today than there were 10 years ago in households. So even with the same mover rates, we're still seeing higher numbers than we did 5 and 10 years ago.
So that's very interesting because we also brought up a chart that showed the different home prices and different income levels, sort of high, medium, and lower. So even if millennials are coming in, how affordable are homes, and who are they most affordable for, Nela?
That's a great point, great question. Yeah. You know, millennial homeownership, young adult homeownership rate is actually less than it was 20 years ago. So while there has been a lot of improvements, we're still behind the curve when it comes to a normal mortgage market. So who's buying? We've seen that people who are buying have larger down payments, they have good paying jobs and very high credit scores. That market is booming for those particular cohorts of people. But still, a lot of millennials are saddled with student loan debt. They're missing out on rock bottom, dirt cheap mortgage rates. and they're seeing home prices escalate for the very reason that the guest just stated. There's not a lot of supply. Supply has not recovered to the extent of demand. So higher home prices are really challenging affordability. So we do see this huge demographic tailwind that will support demand. The question is, do we see the supply that'll keep up with it?
Sheryl, you said that your business at Taylor Morrison is doing really, really well, but what are the biggest factors that make it do better or worse? More well or less well? Is it disposable income? Is it how much people are making? Is it sentiment? Are people saying, I'd rather spend my money somewhere else than in buying a house?
No, I don't think so. I think the consumer's feeling as good as we've seen them in years and years. I think they feel good about their jobs. They're financially more secure than they've been. When we talk about the demographic tailwinds and we talk about the millennials, if you were to chart this for the last 20, 30, 40 years, we would see home ownership rates really have moved about a year every few years. And so we're seeing millennials not purchase homes until probably 32, 33, a life change, marriage, actually probably more relevant, even children. And that's what's really enticing them into home ownership. So I think the millennial tailwinds will continue to work in our favor as the largest group of millennials today are just turning 30 and 31. We're also seeing another interesting trend, and that is consumers are buying less than they can afford today. In fact, when we look and test our order book, our backlog on a quarterly basis, on average, our consumers, our buyers can afford something either larger or an interest rate that's 400 to 500 basis points higher than they're paying.
Yeah.
So I think that's about life's choices.